According to Reuters and Tesla's website, Tesla cut prices for all versions of its Model 3 and Model Y vehicles in China by up to 13.5% on Friday, after its December deliveries of China-made cars fell to its lowest point in 5 minutes. Tesla a few days ago reported disappointing vehicle delivery figures for 2022, coming in at about 40%, which is below its long-run target of 50% annual vehicle delivery growth. And it had already begun cutting prices in China. This is the seventh round of price cuts in China. Of course, China is one of the largest, if not the largest, electric vehicle market in the world. And so these price cuts coming in the largest market is not good news for Tesla stock investors that have already had a difficult last few months with its CEO Elon Musk distracted with the Twitter acquisition and not paying close attention arguably to what's going on with at Tesla. And so this news it is going to have a double downside effect here. For one, it's going to impact Tesla's gross profit margins immediately, right? It's selling, if your selling price falls, and of course its cost of goods sold are actually rising because inflation is impacting the company as the cost of goods sold is rising. But now, when it cuts its prices, competitors are not going to stand still, right? They're going to see this as a move to gain market share, to gain sales, and competitors might follow suit and lower their prices. And in the end, so relatively speaking, in the end, Tesla ends up in the same relative position vis-a-vis its competitors. Consumers will be better off because now EV prices will be lower, but profit margins in the entire industry could come down depending on how its competitors respond, which remains to be seen. So let's take a look at Tesla's. I want to show you two things here. I want to show you Tesla's gross profit margin on the bottom here, and on the top it's Tesla's quarterly revenue growth. Um, First, let's look at its gross profit margin, which it has done an excellent job expanding. It is the best in class EV manufacturer and seller in terms of gross profit margins. All the other players hope to someday achieve the gross profit margins that Tesla is achieving in terms of electric vehicle sales. But that's really peaked, and it's actually coming down. It peaked at about 27%, stayed there, and it's now trending downward 26.6% in its most recent quarter. And now with these price cuts and inflation eating into profitability, it would not surprise me if this gross profit margin declined sequentially in its next quarterly update when it reveals these figures. And this could get even worse because competitors are really ramping up production, right? Rivals like Rivian have billions of dollars in their war chest, and they're really building out their manufacturing facilities. And now they're competing with Tesla, buying up the same resources, the same material, the same experience, the same labor, and it's bidding up the prices. And so that's going to continue eating into Tesla's profits, and it's not looking good for Tesla, and it's not looking good for Tesla stock investors who can't seem to catch a break in the last few months. The stock is under some severe pressure, and I don't expect this to help at all. So keep this in mind. This is the first and then also keep in mind that this is the first side of the equation, right? Tesla announcing the price cuts. The next negative to look out for is what competitors are going to do. If competitors start announcing price cuts, boy, that's really bad news for Tesla and the industry overall. Competition is already bad in terms of everybody's ramping up EV production. It's not just Tesla, Rivian, Lucid, Neo. It's legacy manufacturers like Ford, GM, Toyota. All of them, they're all increasing production as well. So it's unit production fighting for the same resources. And so now if they're going to need to lower prices, you've got pressure from both sides. You've got pressure from rising costs, and then you're going to get pressure from lower prices. That's not going to be good for these profit margins for these already, in my opinion, expensively valued EV specific stocks like Tesla and NIO and Rivian and Lucid and Polestar and all of those that are EV only. They're trading at severe valuation premiums compared to the legacy automakers, which could get eroded as the realities of the fact that they are car companies with um, uh, you know, all of the ups and downs that come with being a car company, including the massive capital investment that's required to build out manufacturing and all of that. All right, so that's all I've got for this Tesla stock update. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.